Welcome. In this video, will Zbcn coin bullishness come again? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart shows that the current price movements are fluctuating within a distinctly downtrending structure. Such downtrends represent periods in the past when buyers have been weak and sellers have been in control. However, this is also a harbinger of great opportunities, because historically, breaking downtrends marks the moment when the price regains strength and enters the initial phase of an uptrend. The chart structure currently under scrutiny presents a picture with just such potential. The downtrend line is a strong resistance line that the price has tested many times before and has received downside reactions on each test. This line is like a psychological limit for traders. However, with each test, sellers get weaker and buyers start to take stronger positions. This means that the trend line is more likely to break in the future. At the moment, the price is approaching this falling trend line again, suggesting that the market may be preparing for a new bullish move. The important thing at this point is that the price not only tests this trend line, but also breaks it decisively and on strong volume. If such a breakout occurs, this is considered a very positive signal in terms of technical analysis, because an upside break of the falling trend line does not only mean that a short-term resistance level has been breached, it also indicates that a change in perception has begun in the market and that buyers are back in control. After this breakout, it's quite likely that upward movements will be much more accelerated and sharp. Many technical analysts consider the breakout of downtrends as a trend reversal and prefer to take positions after such breakouts, especially if the retest process that follows this breakout is also successfully completed. Then the sustainability of the uptrend is much higher. The fact that the price is currently preparing to break above this downtrend makes for a very exciting picture. Moreover, many technical patterns are likely to be triggered if this breakout materializes. For example, if this breakout combines with positive structures such as a cup and handle pattern, a double bottom structure, or an ascending triangle, there are very strong technical reasons to move targets higher. Such scenarios are common in technical analysis and are considered by traders as the beginning of positive price action. At the moment, as the price is approaching the falling trend line, market participants have turned their eyes back to this critical level. If there are strong closes above this line, it could be not only a short-term move, but also the first step in a long-term trend reversal. This would be a positive signal for both traders and medium to long-term investors. Moreover, breaking such downtrends often has a positive effect on investor psychology. The price, which has been under pressure for a long time, reassures investors after a breakout, and the appetite for buying increases. This leads to significant increases in volume. A volume-backed breakout is one of the most reliable signals in technical analysis. This is because it shows that not only the price but also the market participants are strongly accompanying this movement. In this case, one of the most important elements that traders should consider is risk management. Because although the probability of a breakout may seem high and positive, it is always necessary to act cautiously in the markets. At this point, stop-loss levels should be carefully set and position sizes should be controlled. Nevertheless, the potential upside in the event of a break of this downtrend can be quite fruitful with a properly managed position. Looking at the overall picture, it seems quite possible that if this downtrend breaks, the price could reach and even surpass its previous highs. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. When we take a detailed look at the chart, we see that the price is currently at a very critical level that needs to be carefully monitored. This level has been tested many times in past price action and has worked as a strong support area. This means that this support zone on which the price is currently positioned is very meaningful in terms of technical analysis and is a point that is highly valued by market participants. Support levels are particularly known as areas where buyers tend to step in, and the price is always likely to react when it reaches such areas. In the current situation, the price continues to move sideways above this critical support level. Such movements usually indicate that the market is in search of a balance and is in the process of deciding on a direction. In this case, staying above the support level and an upward reaction from this point would be an extremely positive scenario from a technical point of view. It is likely that the same level will provide a basis to move the price up this time, especially when the buying reactions from this area in the past are evaluated. Support zones act not only as horizontal lines but also as psychological boundaries. This is because the vast majority of investors concentrate their buy orders at these levels and expect the price to hold there. This makes it more likely that the price will react upwards with support. It may also be the case that this support area acts as a consolidation zone. In other words, after the price moves horizontally here for a while, it may break sharply upwards with volume support. On the chart, we can observe that this support level has worked before, and the price has repeatedly bounced off this area and accelerated upwards. Such levels are referred to as strong support in technical analysis, and if the price retests this level, there is a high probability that buyers will re-engage. If this support zone works once again, it means that the uptrend could resume. Bounces from this type of support are usually strong and voluminous because the market is aware of the reactions from this area and positions accordingly. The fact that the price is currently at this support level can be considered a very exciting development, because the principle of buy at support, sell at resistance is often applied in technical analysis, and these support levels are where buyers are activated. If an upward price movement starts here with an increase in volume, this could be the beginning of a new uptrend. It is technically quite logical and likely that an uptrend, especially starting from this support, will target previous highs in a short period of time and then move towards new highs. Another important factor to consider at this stage is how long the price stays at this level. A prolonged stay at the support level indicates that the market recognizes this area as a strong base. This usually signals an accumulation process and a strong move is expected to follow. If the price consolidates at this support zone and then makes a breakout to the upside, this technically constitutes a breakout signal, which can be a harbinger of strong upside. As a result, the support level where the price is currently positioned represents a highly critical zone in line with historical data. This is not only an area where the price has reacted many times before, but also a potential bounce point in terms of technical analysis. If the price bounces upwards from here, this indicates that the market has recognized this level as support and buyers are back in. This is an important technical development that heralds a bullish breakout. Analyzing the chart in detail, we see a falling trend line, which is one of the most important elements of technical analysis that is evident in the RSI indicator. The RSI is a reliable tool that traders and technical analysts often use to assess market momentum. This indicator is critical for both identifying overbought and oversold zones and for catching early signals of trend reversals. The falling trend line that we are currently observing can be considered as a visual reflection of the long-standing pressure on the RSI and the weak momentum on the price action. However, as of the current structure, this falling trend line is very close to breaking, which stands out as a promising and positive development for investors. If this downtrend in the RSI indicator breaks, the beginning of a very positive and upward movement can be triggered from a technical point of view. Such breakouts usually bring about upward attacks on the price chart, as has been frequently observed in the past. Because when the downtrend in the RSI is broken, this is usually an important signal that the market is breaking out of its downtrend and starting to regain strength. RSI should break this trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.